Hello friends, this is Manish Chauhan from Jagoinvestor.com, and today I am going to talk about a lot of basic things for NRIs. So this video will be helpful for someone who has just become an NRI or who is thinking of going out of India and becoming an NRI. And I'm sure there will be a lot of things which existing NRIs also don't understand, so it will be helpful for them. So we'll be talking about, who is an NRI, what are the rules, what is the double taxation treaty, then regarding your financial planning, regarding your wealth creation. So things like this we'll be talking about. So let us start with the basics and first touch the myths. A lot of people who have not yet become the NRI, they feel that once they move out of India, they will become an NRI. This is now how it works. And they think that once they are back in India, they will again be treated as an Indian resident. So it is totally wrong. This is a very simplified way of looking at it. It doesn't work this way. There are laws regarding it. There's a proper definition of who is an NRI. Now, most of the people feel that there is only one definition of NRI, that XYZ, this is the rule, and if you satisfy that, you are an NRI or you are not an NRI. However, in India, and this can be a new thing for many people, that NRI is defined in two different acts. So Income Tax Act also defines who is an NRI, and FEMA also defines who is an NRI. So let us first understand what are these two things. So Income Tax Act is a law and FEMA is also a law, and these two things define different things. So income tax defines how taxation will work for you. So in a particular year, will you pay the will you pay the tax as a resident or as a NRI? That comes from Income Tax Act NRI definition. And FEMA tells all the different rules of where you can invest, money transfer rules, all those things are governed by FEMA. Okay, so be clear on that. So it may happen that in one particular year you are an NRI as per FEMA but not as per Income Tax Act, and vice versa. So this is possible. Okay, this is something which a lot of NRIs do not understand. Okay, so let us understand who is an NRI as per FEMA Act. So as per FEMA, it defines an NRI as someone who is not a resident, and there is a definition for who is resident. So if you don't fall into that definition, you are an NRI. So who is a resident? You are a resident in India if you have been in India for a period of more than 182 days during the preceding financial year. This word preceding is very important. Okay, it is not talking about that particular financial year, it is talking about preceding financial year. So that person who satisfies this rule, that person is a resident. However, there are three exceptions. First is if you have gone out of India for taking up employment, if you have gone abroad for carrying out a business, or for any other reason where your intention to stay abroad for uncertain period, your intention is like that. Okay, in these three cases you are definitely not a resident for sure. Okay, so this is what it means. So let's say you go out of India, you go to US for job. From day one you are a NRI. This resident definition will not apply to you. Okay, so I hope this is clear. So this was FEMA, and now let us look at Income Tax Act. Now in Income Tax Act also, it is like this only. So NRI is someone who is not a resident, and who is a resident as per Income Tax Act. So here is the definition. So the person is in India for 182 days or more during the financial year, not preceding like FEMA. It is during the financial year, or if he or she is in India for at least 365 days during the 4 years preceding that year, and at least 60 days in that year. I know it can sound a little bit complicated and you may feel why this kind of definition is there, but let's stay with that. Okay, it is like this only. So any person who falls into either the first category or the second category, okay, that person is a resident. And if you don't satisfy any of them, in that case you are not a resident and hence you are a NRI. Okay, so I hope this is a bit clear. I know it can be a little overwhelming, but that is how it is. So important point to note is that if you go out of India for employment or business, you are considered as NRI as per FEMA, not as per Income Tax Act. Okay. So after you leave India for business, employment, whatever it is, or if your returning is not clear, your intention of stay is not there, in that case you will be treated as a NRI as per FEMA, and after that all the money transaction rules, where you can invest, all those will be governed as per FEMA. Okay. So just as an example, for example, if you take a example of mutual funds, if you are investing in mutual funds after your departure from India, then you are an NRI. You have to invest as a NRI. Okay, that is very important. And in the same way, if you are returning to India permanently, you are considered to be a resident from day one as per FEMA. This is very important. So your period of stay in India does not matter in that case. Okay. From income tax point of view, you are either a resident or a NRI for the whole year. Whereas as per FEMA, you can be NRI for some period and then a resident for another period. So let me explain this. So from income tax point of view, when you pay your taxes at the end of the year, you are either paying it as a resident or a NRI. It's not a 50% NRI and 50% resident. It's not like that. You are either an NRI or you are a resident for a particular financial year from the viewpoint of income tax point. However, as per the FEMA, it can be partially NRI and partially resident. So let me give you an example. So for example, you live in India for 5 months, for example. So April, May, June, July, August. Okay, April, May, June, July, August. You leave India on 1st of October, for example. Okay, for a job in Germany, for example. So for the first 5 months, you are resident as per FEMA. For the next 7 months, you are a NRI as per FEMA. Okay, I hope you got this point. Okay, so as I said, it is quite possible that you are an NRI as per FEMA and a resident as per Income Tax Act, and the opposite is also possible. So let us take a very simple example. I hope it will get clear. So let's say a person leaves India for employment on 20th December 2018. So what happens under FEMA? Since you are going abroad for employment, you will be considered NRI from day one of your departure. So you will be a resident till 20th December 2018 and NRI after that. Hence, if you are making investments after 20th December, you should be doing it as an NRI. All those NRI rules will be applicable for any investment. Okay, what happens as per Income Tax Act? So since you are in India for more than 182 days, right? You are leaving on 20th December. So if you talk about 2018-19, you have already lived for more than 182 days in India. So because of that, you will be treated as a resident in that particular financial year. So when you will be paying your taxes in that year, in your March 2019, which is financial year 18-19, you will not be paying the taxes as an NRI, you will be paying it as a resident. When you pay taxes, the same thing. So you'll be paying taxes as a resident. However, imagine you left India in, let's say, 1st of July. In that case, you were not in India for more than 182 days and hence you are an NRI. Okay, fine. Now let's jump to another topic and let's talk about double tax avoidance agreements. Now, one of the biggest fear of NRI is that, or you can say a major concern of NRI is dual taxation. They feel that, will I be paying the taxes in 2 different countries? Because why it happens? Because a lot of countries tax the worldwide income. So like for example, US, for example, one example. So what US says is that if you are having any income in US, we'll tax you. But if you have any income in India or any other part of world, we'll tax you again. So imagine a person who has done, imagine an NRI who has done NRI fixed deposits and some mutual funds in India. Okay, and he sells them or whatever is the case, and he earns some income in India. So Indian government will be putting TDS and taxes, right? So he'll be paying it. Now the US government says we will also tax you. So he is paying this the tax again on the same income. So it will be double taxation, right? So what has happened is a lot of countries, they have done these treaties, they have done the agreements, and because of that you will not be paying the double taxes. So let me show you a very simple example of how it works. So let us say that in India taxes are 30% and in your country the taxes are 40%. So you pay the tax in India, right? And then when you are paying your taxes in country ABC, you calculate whatever is the tax, and then you say that, you know what, I have already paid some taxes in India. Now if there is a balance, let me just pay that part. So I don't have to pay the same tax again, I'll just pay the balance, and you just pay the tax in one country in one way. Okay, so you get the credit of what you pay in India and you pay the balance. So this is a very simplified version of this whole thing. It's quite complicated, but this video is just going to share a very basic overview of this topic. So here is the list of all the countries which has this agreement with India. So you can just have a look at all these. It's in alphabetical order. So you can see all the major countries, like for example US is there, UK is there, then Thailand is there, Switzerland is there, Sweden, Singapore, Qatar. I think most of the biggest countries, they are there. Okay, Australia is there, Brazil is there. So you can have a look at it. China is there. Just a minute, I think. Yeah. Okay. So now let us jump to another topic and let's talk a little bit about NRO versus NRI account. A very basic and very, very important topic, and this is somewhere where this is a topic where a lot of people make some mistake. So as an NRI, you have to open a NRO account or a NRI bank account. And you know why this is the case? Because as per FEMA, NRIs can't have a saving bank account the moment you become a NRI. Okay, this is not from Income Tax Act. This is as per FEMA. It says that NRIs just can't have a saving bank account, and a lot of NRIs do this. I know about it. It's a different thing that it is not caught, and the laws, the systems are not as strong to to catch you. But this is a violation of the rule. Okay, and if you're doing it, just understand that there can be bad implications about it of it. So it's recommended that you don't do it. If you're doing it, do it at your own risk. Okay. So yeah, so NRIs can't have a saving bank account. So the moment you become an NRI, you have to convert all your saving bank accounts to either an NRI account or an NRO account. And if you don't have an account, you can open an NRI or NRO account. But yeah, just get this point that you need to have one of these accounts. Now, what are these two accounts? Which one you should open? Let's look at that. So let me compare them on few things. So let's first understand the meaning. So NRI account is for you to transfer your foreign earnings and Indian earnings. You can deposit your foreign earnings in this and Indian earnings both. Okay. NRI account is to deposit the incomes earned in India. So imagine you are working in a country, you are earning your salary there. So you can get it deposited in a which account? Not NRO. It has to be NRE. Okay, so from that perspective, this is important. NRO, when you can open, when you have certain kind of incomes in India, for example. So if you have a property in India and you are getting a rent, okay, it can be deposited in NRE account also. That is possible, but NRO is specifically for that. Okay, and we'll see some of the other things also. Taxability: the interest which you earn in NRE bank account, it is it is tax free. However, the NRO is taxable. Repatriability, very, very important. What is the meaning of repatriability? Repatriability means, can you take this money out in your country? So with NRE, you can repatriate. So whatever money you are putting in NRE account, you can again take it back and use in your home country, in your country, like wherever you are. So let's say a person is in China and he wants to buy a house in China, and he wants to grow his money first, so he can invest in NRI account, let the money grow, and whenever he wants, he can withdraw the money and buy the house in China. Okay, so it is repatriable. Now in NRO account, the interest part is repatriable, full interest you can repatriate. Okay, however, the principal amount can also be repatriated, but within a set limit. So at this moment, from what I understand, it is $1 million US. Above that, it is not possible. Or if it is possible, you have to do some extra work for that. Some permission has to be taken. But I'm not very clear on that. Okay, fine. So if you are very clear as an NRI that I won't be needing money in my country, like wherever you are working, all the money which I am putting in this NRO, whatever it is, NRI or NRO, I am going to just grow the wealth, and I'm ultimately going to use it in India only. I don't want repatriation. It's not my requirement. In that case, you can open NRO account. However, you can't deposit the foreign earnings. So because of that, you will have to open NRI account. Okay. Joint accounts. So joint accounts, in case of NRI, it can be opened by two NRIs only. It can't be opened with an Indian citizen. Both the people have to be NRI. However, in case of NRO, it can either be two NRIs, three NRIs, or it can be a mix of it. So one NRI along with an Indian citizen. So what you can do is, if you have an NRO account in India, and let's say your spouse is in India or your parents are in India, you can have a joint account with them. That is possible. And deposits and withdrawal. Now this is very important. You can deposit in foreign currency in NRI account and withdraw in Indian currency. In NRO, you can deposit in foreign as well as Indian currency and withdraw in Indian currency. What it technically means is that there is an exchange rate risk in NRI. However, there is no exchange rate risk in NRO. So if you are from US, for example, and US dollar is, let's say, 70 rupees, 70 rupees is equal to $1, and you deposit 70 rupees. For example, in NRI, you deposit $1. Okay. Now what happens? In NRI, it will stay as a foreign currency only. Like you can withdraw in Indian currency, but the money will fluctuate as per the dollar price. Okay. So after a year, you are withdrawing $1 again. Okay. Let's say you are withdrawing in India in Indian currency. So it will be as per the current exchange rate. So let's say 70 rupees equal to $1, that has become 65 rupees a dollar. So your $1 value has come down to 65 rupees. So if you withdraw in India after 1 year and the exchange rate has fallen, you will get less money. So, and you can also get more money. So that exchange rate risk is there. However, in NRO, it is not there. So now I hope you are very clear about that. What is the difference between NRI and NRO. So now you take the pick depending on your requirement, depending on your situation, depending on your goals. You can choose between NRI and NRO. Okay. So I think we have covered a very basic things about NRI. Now I want to talk about, financial planning for NRI and wealth management for NRIs. We have seen that a lot of NRIs, when they go out of India, they start working. It's a new phase of life, new country, new place, new job, high ticket sized salary. It's not like India, right? You earn better. So there's excitement, and somewhere, their financial planning, their wealth management takes a hit because there is less time. They are away from family. They are lonely. All these things mixed, they ignore this part. So every NRI and every person, whether it is resident or NRI, it does not matter, but I'm specifically talking about NRIs here. So they have to make sure that their financial planning is strong and their wealth management is strong. Now, what is the difference between financial planning and wealth management? So when you do that, when I say that you should do your financial planning, I'm talking about planning part. Okay, planning things in your life. And what are the things are in financial planning? Let's see. So your investment planning, how will you invest, where will you invest, how much you will invest, all those things, the planning part. Your goals planning, what are your financial goals? How much money you need for your goals? Do you even know your goals? Do you even know the target of your goals? Have you done the calculations? Do you know if your resources are enough to meet your goals? So many people don't know this. So that planning. Insurance planning. Do you have sufficient insurance? Be it life insurance, be it health insurance, be it critical illness, all these things. Is it sufficient? So planning for that. Tax planning. Have you done your tax planning properly? How will you optimize your taxes? How will you make sure that you pay the minimum tax as a NRI? Okay, legally I'm talking about. So all those plannings. Then debt planning. Do you have any debt? Do you have any home loan? Are you planning for it? So planning for all that. Then retirement planning. How is your retirement? Where is it going to happen? Is it going to happen in that country where you are? What is your plan? If it is in India, are you saving enough? Are you on the right path? Have you done the calculations? Do you even know if you will have the 100% of what is required, or will it be like 15% of what you need? So that planning. Then children education planning, children marriage planning. These are the goals I'm talking about. So these were the part of financial planning. Then portfolio cleanup also, because a lot of people make so many mistakes. Oh my God, so many silly mistakes we have seen NRIs doing. Buying wrong products, buying totally idiotic products, and having the junk factory in their portfolio. So all that cleanup, who will do that? So that planning. So this as a whole is called as financial planning. Okay. Let's talk about wealth management now. Now wealth management is, if you pick the word management, you are managing your wealth. So from that perspective I'm talking. So there are mainly 2-3 things in that. The first thing is building the net worth. Is your focus there, or is it just on the package and high salary and all? You know what? Truly speaking, if you have to just measure one thing in your financial life, if you're growing or not, if you are making progress in your life or not, you just have to track one thing, and that is net worth. All you have to ask is my net worth growing or not? Is your net worth this year more than last year or not? Is it more than before 5 years or not? If that is not happening, all those high salary and I have good pay package, it is all bullshit, truly speaking. So how are you managing it? How are you doing it? All those planning, all those things you have to do. Then controlling the risk of the portfolio. If you have a portfolio of 1 crore, how is it invested? Is it invested in such a way that it can drastically come down and destroy? Is it going to happen, or how have you controlled the risk part or not? Have you done that planning or not? Who has done that? Optimizing the returns. So are you getting the best returns out of your money? Is your money really working hard for you? So all these questions, also all these 3 things combined, I would say, is what wealth management is all about. So you have to think on these lines, start thinking about it. Okay. Now, if we go a little deeper in financial planning, I want to talk about few things why NRIs need to be very serious about their financial planning. Okay, everyone has to be serious about their financial planning, be it NRI or a non-NRI, it does not matter. However, in case of NRIs, there are few things which are different. For example, higher amounts are involved in case of NRIs. For a resident, we have seen people invest 5,000 rupees a month, 2,000 rupees a month, 15,000 rupees a month. However, in case of NRIs, most of our NRI clients, what they do is they invest 3 lakhs rupees a month, 2 lakh rupees a month, 50,000 rupees a month. One guy invests 8 lakh rupees a month from Saudi Arabia. So very, very high amounts are involved. Okay, so you have to be extra careful. Then complicated taxation. If you are a resident, it is not as complicated as taxation. So your country taxation, what happens in India, where have you invested, what are the rules? So if you miss all those things, you can be in trouble a little bit. Then compliance. A lot of compliance is there for NRIs, a lot of documentation, all those things you have to take care. Pressed for time. When you are out of India, you are away from family, you are in a different time zone, you have pressure of work. It is there in India also, but for NRIs we have seen that the time difference is also there, and it's a more complicated structure than a resident. better use of money earned. We have seen that, a lot of NRIs, because they are earning high amounts, it is not going to happen for 30-40 years. A lot of people go for a limited time. A lot of people feel that I'll work for 10 years and then I'll come back to India. I'll work for 5 years and then I'll come back in India. A lot of times it is not in their hands also. A lot of people don't know for how long they will be working outside India and get a high salary. So this is the phase of life where the ticket size is very high. The income you are earning is quite high. Okay, and it becomes very important for you to make the better use of this money earned. So if not done in a right way, it's like it will become waste. And then higher lifestyle goals compared to other people. We have seen that most of the NRIs have a very high goals for themselves. The amounts are high, and the lifestyle required by them is also high. So who will do the planning for that? So think about that. Now, who will do this? So you can do it yourself. Let me tell you a very small story, or not a story, but a fact. There are 3 kind of investors in this world. Okay, 10% of investors don't need any help. They are blessed by God. They are smart enough. They understand how things work. So a financial advisor, whatever they will do for you, okay, whatever services they will give it to you, whatever support you are capable of doing it on your own. 10% of the people in this world are like that. Okay, and who says this? Morgan Housel, one of the famous bloggers, one of the most respected people in finance industry in the world. These are his words. Okay, so 10% are like that. Then 10% are investors who can't be helped, which means that their wiring is, somewhere there's a problem in them. Okay, they can't work with anyone. They are just not designed to work with anyone. If they work with any advisor, any support system, it will just not work for it. Okay, they will always find fault. They will always make mistakes. They will never trust anyone. So these 10% people are just, they are tough to handle. Okay, they are better be alone. So first 10% and last 10%. Now 80% of the people, they need some kind of help. It can be high amount of help, low amount of help, but they need help, and they are better off with a coach. They're better off working with an advisor. So they will perform better when they work with someone, when someone is tracking them, when someone is monitoring them, when someone is there to give them a second opinion, to remind them. Okay, and their performance level goes up. Okay, so now you have to decide which category you are in. A lot of investors are not able to decide that. They don't know about it. So think hard. And we have seen a lot of investors, they think that they are of first category, and after 5 years, 6 years, when things are not working out for them, they again come back to an advisor and say that, my portfolio is very big. I don't have time. Please do something. I'm not able to handle. I thought I will be able to do it, but it's better that I work with someone, pay the fees and get it done. So this is how it works. So just make sure that it should not happen that a lot of years are wasted trying to figure out who you are. Okay, so let me tell you 4 reasons why to hire a financial advisor. So first is a professional advice. So if you are a doctor, you know what a doctor does. If you are an engineer, you know what an engineer does. If you are a marine engineer, you know exactly, you are specialized in that area. So are you specialized in financial advisory, wealth management, all these areas? There is someone else, right? So you get professional advice in that. It's not a random advice from a neighbor and a relative. Okay, it's some professional is giving it. Tracking and monitoring. Who is going to track and monitor how your wealth is growing, how your funds are doing, what is happening in them, what are the taxes and all those things. If you think you can do it, trust me, life is very complicated. There are too many things in life to handle. And if you really want to add this in your life, one more thing, then it depends on you. Like you decide if it is something you can do or not. So tracking and monitoring is very important. Nowadays in this world, We have come to a point where earning money is more easier than managing the money. Okay, so think about it. Unbiased advice. So an advisor works for you. He is either compensated by you or through the company, but they work for you. Their interest is with you. Okay, and if you are doing a mistake, they will tell you that you are doing a mistake. It's very hard to admit yourself that I'm doing a mistake. If you buy a fund and if it is not doing good, and if it is really a pathetic fund, or if it has turned into a bad fund, you as an investor, you will try to come up with all the reasons, that this fund is good, I have done the research, I can't be wrong, and all those conversations can happen. But the advisor will tell you that, what, it's a bad fund, just get out of it. You are wrong. Okay, so you get the unbiased advice. And the last one is my favorite, which is a push factor. We humans are not designed to, actively think and be very active. We are designed to be lethargic. We take shortcuts, and until someone really provokes us and pushes us and reminds us, we don't do things. Okay, I'm not talking about 1 or 2 instances where you are charged up and you say that, okay, I'll now do this, but I'm talking about in general. Okay, you need push factor. So an advisor will make sure that he's tracking you, he's keep reminding you about things, he's always scheduling the reviews call with you, he's always asking the right questions. So all these things will, it will force you to take action. It will force you to invest more money. It will force you to stay on track. So these were some of the reasons why you should hire a financial advisor. So wealth management for NRIs is very, very important. Okay, we at Jagoinvestor, we offer premium wealth management solutions and support for NRIs from all the countries, and you can either do it offline, you can come to our office if you want, or it can also happen online. It works beautifully. We currently manage more than 130 families, NRI families from all the parts of the country. So be it US, Singapore, Europe, Australia, Saudi Arabia, Dubai, Bahrain, many Qatar, many Middle East countries, and many other countries. Okay, so we are specialized in this, and we do it for residents also, but we are specialized in NRI solutions. So that is all. If you need any help from us, if you want to ask anything from us, if you want to ask for our services, our charges, our model, how it works, how we can help you, you can email us at help@jagoinvestor.com. You can also call us or WhatsApp on this number, which is on your screen. And if you don't want any of these things, no issues. You can always go back to our website, which is jagoinvestor.com. We have written tons of articles. There are tons of videos. There are tons of material. There are ebooks and whatnot. And we also do a lot of workshops in different cities, different big cities. So if you are in India and we have any workshop in your city, just check out our website and come to our workshop, meet us. And there's no harm in leaving an inquiry and just having a chat. We can always talk for 10-15 minutes. If you want to go ahead, go for it. Otherwise, no issues. So that is all. Thanks a lot and bye.